This video covers Mitsui Bussan's financial results for the first quarter of FY 2026, covering the period from April to June 2025. Mitsui Co is one of Japan's large Sogo Shosha, general trading companies, and a member of the Mitsui Group, one of Japan's historical Zaibatsu conglomerates. It is also one of the Sandai Shosha, the three big trading companies, alongside Itochu and Mitsubishi Corporation. Summary of operating results. For the first quarter, core operating cash flow rose by 0.5 billion yen compared to the same period last year, reaching 216.3 billion yen, showing steady progress toward the business plan. Profit decreased by 84.5 billion yen year-on-year to 191.6 billion yen, mainly because gains from asset sales that were recorded in the first quarter of the previous fiscal year were not repeated. Mitsui Co posted a significant year-on-year profit decline, partly due to its high dependence on the resources business. However, this was anticipated in advance. Overall, progress is in line with the business plan at 25%, and full-year progress remains on track. Profit year-on-year segment comparison. Consolidated profit for the first quarter declined by 84.5 billion yen compared with the same period last year. In the Mineral and Metal Resources segment, earnings significantly declined mainly because of lower iron ore and metallurgical coal prices. In the Energy segment, higher gas prices could not offset the impact of reduced production volumes, resulting in a small decrease. The Machinery and Infrastructure segment saw a significant drop due to the absence of asset sales recorded in the previous year. In contrast, the Chemicals segment posted higher profit thanks to a valuation gain on ITC Antwerp, which is a Belgian tank terminal handling hazardous liquids and gases. The Iron and Steel Products and Lifestyle segments both recorded slight increases. The Innovation and Corporate Development segment also improved, supported by stronger results at JA Mitsui Leasing, which is a firm offering leasing and financing for equipment vehicles. The Mineral and Metal segment, impacted by falling resource prices, and the Machinery and Infrastructure segment, which recorded asset sales last year, posted a significant decline in profits. Americas and U.S. business. Domestic operations inside of the U.S. represent the largest part of Mitsui Co's U.S. portfolio. For the previous fiscal year 2025, the Americas business reported a profit of approximately 300 billion yen. The U.S. business profit distribution reflects a balance between domestic operations and exports, with imports and sales also playing an important role in the overall business mix. Therefore, Mitsui Co expects that the impact of U.S. tariffs will not be significant. Shareholder returns policy. Mitsui Co will maintain its shareholder returns policy from fiscal year 2025. For fiscal year 2026, the dividend per share is planned at 115 yen, up 15 yen from last year. Over the 3-year medium-term management plan, cumulative shareholder returns as a percentage of cash flow from operations are expected to exceed 49%. Mitsui plans to continue a progressive dividend policy supported by earnings growth. Total shareholder returns, including dividends and share buybacks, are forecast to exceed 51% of profits by the end of the midterm management plan. The progressive dividend policy continues, making Mitsui Co's shareholder returns still attractive. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 3,276 yen as of August 13, and the US dollar stock price is $456 as of August 12. With the overall rise in Japanese stocks, Mitsui Co's share price has also increased accordingly. Current PBR is 1.24 and PER is 12.2. Dividend yield is 3.51%. Compared to the last few years' PBR, PER show that stock price is relatively higher, which means current stock price is high. However, like other Japanese companies, Mitsui has continued to raise its dividends, so its current dividend yield is higher than in the past. Conclusion. Mitsui Co's first quarter results for FY 2026 showed steady progress toward its business plan despite a year-on-year profit decline, partly due to lower resource prices. Mitsui expects minimal impact from US tariffs and plans to maintain its progressive dividend policy, continuing to deliver attractive shareholder returns. Overall, Mitsui remains on track to meet its full-year targets.